Hello again, everyone. This is Joe Henches with Beyond the Chart, and this is technical analysis of the stock market today. Today is Wednesday, December 31st, the last trading day of the year 2014. And we're going to take a look at the markets, the market action of the last 3 days here, and we'll look at the international global countries like we usually do, our indicators. And we're going to take a look at BIDU, CTRP, Alibaba, and KNDI Corporation. Okay, we're going to start off here with the Dow. Dow was down 160 points today. And over the last 3 days, let's see, on Friday it closed 18,053 and we're closing at 17. So let's see, most of it happened today. You know, we hardly had anything on Monday, a little bit more on Tuesday, and then most of it again today. So we're closing down. The interesting thing, the Dow was up 7.5% for 2014. So let's take a look at that. Here's the dotted line. Here's where it closed a year ago today. Okay. And spent probably the first few months of the year mostly underwater. Then it started, getting very volatile, bouncing back and forth. And then, of course, closed up here the last couple of months. Let's take a look at the indicators on this. We definitely have strong divergence in here on the RSI. And, I talked about this. Let me blow this up a little bit. I talked about how the momentum was slowing and the bars are getting smaller and smaller and smaller, and they get really really tiny. Now, sometimes they just go sideways and push again, sideways, push. And here we're going, we got real small, and now it looks like we're kind of rolling over. Now, the real question is, what kind of pullback are we getting? Now, let me step back to the divergence. You can clearly see the divergence here on the RSI. You can look at the blue line. The blue line did not push to a new high, okay, did not confirm the prices. That's the DI plus. The demand index is not confirming this move either to new highs in here of the last couple of days. And, okay, I think that's the main thing I wanted to point out here on the Dow. Let's take a look at the S&P 500. Up 11.4% for the year. They actually, the best performer of the American indices was the NASDAQ, and then the S&P 500 was number 2. But again, here we're seeing a divergence. No confirmation, and let's take a look at this. Wrong one. Get rid of that. Oh, I know why I don't have the demand index. Let me get rid of that %R. I don't have the demand index here because there's no volume. I don't have any volume listed on the S&P 500, and you need volume for the demand calculation. Okay, so again, let's see this was down. Where is it? Down 21.4 points today. Pretty big move. It seemed like most of it happened in the last hour or two here in the afternoon, especially last hour. They really took it down. Let's see. Take a look at the NASDAQ. NASDAQ up 13.4 for the year. Again, here's the close a year ago. And you can see it pretty, the trend is pretty much to the upside, although we had, a lot of volatile movement. Let's take a look at this. The divergence on here is not as clear. It's not as clearly spelled out, although, this little move in here to new highs clearly wasn't confirmed. We're not even close with these. Let's take a look. Yeah, blowing this up. Now, these closes are all back below the 10-day exponential moving average. Now, let me go back to the Dow. I know the other point I was going to make on this. Looking at a wave count, I really think that the fourth intermediate wave here came down here now. I mean, it was pretty clear. I thought we were possibly topping out here. And then when we got this and we came back and went to new highs, then that clearly was not the case. Once we went above this high, then that scenario was out of the window. So now the real question is, this move here is really hard to look at a wave count. It's very hard to tell. It makes me want to think that this could possibly be the wave 1 and a wave 2 pullback. It's not very deep. It's kind of shallow. And so therefore we could have this being 3 and this could be a deep 4. Since 1 was shallow, this could be a deep 4. This could possibly be 5, which is then having divergence, which is what typically happens on a wave 5. So I think that is a legitimate scenario. I mean, we could be topping here on this 5th intermediate wave. The other possibility is that this is a wave 1 in its entirety. This is a wave 2. Then this can't be 3 and 4 because 4 cannot overlap 1. Okay, so this then would be a 1, 2, 1, working a 2, working a second one. Now that scenario would kind of go away if we go below here. So right now, because of the divergence, I'm almost leaning towards this being and I'm going to put this out here, it's kind of tentative, as a 1, 2, 3. And again, what I really need to do is try to get in and look at the hourly waves on this thing and see if this is 5. So that's a tentative wave count. Typically the waves of 4 and 2 are the opposite of this. Typically 2 is your deep retracement and 4 is the shallow one. But what happens with these corrective waves is they alternate. Okay, that's usually a guideline that your corrective waves will alternate. So if this one is shallow, then this one should be deep and more complex. And it looks like it is because this is clearly just a quick retracement here. So we'll see. And again, we just didn't get hardly anything in terms of any kind of corrective action all the way up through here. So that's just one scenario I'm going to put out there, and we'll just see how it plays out. We'll just continue to watch this kind of action here and see what it does. Let's take a look at the New York Composite. Now, here's the other thing with the New York Composite. Okay, the New York Composite was only up 4.2% for the year. Okay, this is all equities. It doesn't have any other kind of ETFs in it or any other kind of derivative type of stocks that trade. This is just all equities, and it's interesting that the closing high was here on July 3rd. The intraday high was here on September 4th, and then we didn't get any confirmation push. Okay, no push up here, and definitely no push up here. So one of the things I'm wondering is whether or not this is a wave 1 down, which has a little bit more of a 1, 2, 3, 4, 5 wave, which again, a first wave down in the direction of a new move is 5 waves. Okay. And so then we got a strong pullback that did not go to a new high, so therefore could legitimately be called a wave 2 pullback. Then we're working another one down to the downside here, another wave 1. So this would be like wave 1 of 3. So if you follow my Elliott wave, you'll understand this. I know if you're not a big Elliott wave Elliottian or into the Elliott wave, it gets a little confusing with what I'm talking about with the wave count. But I am trying to, sometimes the wave count really will help you put in perspective where you might be in what stage. And I look at this and think that there's a 1, 2, 3. Notice this sharp rally and it came back down on a one-day basis. That could be a sharp 4. So you can have a 1, 2, 3, 4, 5 here. Again, a nice sharp pullback similar to this one. And now we're rolling over again. So we'll just have to see, do we take out this point? Do we break this trend line? If that happens, then this becomes very negative. So we're just going to have to keep our eye. Russell 2000, look how this it gets up to this trend line and it bounces above it slightly, and then it just gets repelled right on back down. Now, we'll see whether or not that holds. It didn't close below the 10. Look how weak the Russell was for the year. It was the weakest index. And again, I just did a quick calculation based on this close and what the close over here. So these are my quick and dirty math on these. I think they're pretty accurate, but double check everything. So again, the New York Composite up 4.2, the Russell 2000 up 3.5%. So we'll see now whether we start to get a breakdown in the Russell 2000. Right now, the moving averages are all aligned, but again, you got to remember moving averages lag. Okay, price is the most important thing. I like moving averages because they can kind of confirm direction when you get crosses and that type of thing. I mean, clearly when the blue crosses above the 21, the 10 crosses above the 21, it's indicating the short-term direction is now basically to the upside, okay? And when it happened over here, the short-term direction was down to the downside. And the same thing, what you don't know is how strong that short-term move is going to be. Like here it was fairly short, here it was fairly long, here it was fairly long. And you can get caught in whippiness because, again, like here, look how short this was over here after you got across. It was a very deep, fast, and then it was bouncing back. So it's nice as a visual and nice as a guideline using moving averages, but just remember they lag, okay? All right, that's it for the indices, the indicators. Short-term trading index, pretty strong bearish reading here. The 10-day is still, it's rallying last couple of days, but it's still in neutral zone. It's right here in the middle, okay? And again, this isn't at an extreme, not nearly like what it did on here on the 10th. And the VIX, boy, big move on the VIX today. It was up, I think, over 20%, 21%. Very similar to this move here on July 10th or December 10th, and very similar to this move on October 9th. Okay, both of these had more moves to the downside. I think there was, like, based on a closing basis, there was at least another 500 points, another 500 points on the Dow, just on a closing basis after both those moves. So it's going to be interesting to see now with this VIX rallying the way we are. Does it come up here and break this trend line like it's done before? Now here it started to, and it didn't have enough power. Here it broke this trend line. It came up and retested the high of that initial spike. Same thing here. Breaks this trend line, comes up and tests the high of this initial of the spike. You know, and so that, you know, kind of watching for that. You see that pattern developing. So if it comes up here, breaks this trend line, chances are there's a chance we might come up here to the 30, 31 reading on the VIX, which would mean some intense selling. So we're, you know, closely watching the VIX. This was up pretty strong before the market broke in the last hour. I mean, market like doubled its loss in the last hour, I believe. I'd have to go back and look at it in detail. But I remember looking at this VIX and thinking, wow, the VIX is, you know, up 21%. And the market was only down like 80 points or something at that point. And I just thought, okay, this seems pretty strong move. And then next thing you know, they dumped everything in the last hour, a lot of it in the last half hour. Okay, high-low index. Not a whole lot to talk about in a new reading other than that this did not confirm any kind of move to a new high, and we talked about that once before. Let's see. What else? Oh, the high yield I was going to look at. Oh, it's right on it. Okay, this is pulled back down. A little bit of a reversal. Well, it's not a reversal bar. It's just a selling bar today, downward bar. And again, it's starting to downtrend again. Put to call ratio today, I don't have it in front of me, but it's not at an extreme. But it is 10 days at like 0.59, I believe, something like that. 0.59, 0.58. So it's still dropping, and it's starting to get in that area. But if we start getting into sell mode, that's not going to keep dropping. Okay, let's take a look at the German DAX. Okay, the German DAX has only had a couple of days of trading, and it didn't look like it traded today. I think they're closed on New Year's Eve. I noticed they were closed on the 31st last year too. So up 2.6% for the year. So not nearly a big, you know, for the year in terms of overall gain, but you see all the volatility of being whipped up and down, up and down. Next one is Russia. Where is it? There it is. RTSI. Okay, so this has come down from a week ago. And as you can see here, they do not close on Christmas Day. And so the trading has started to come down the last few days. And again, pretty negative. I didn't do a calculation on this one. I should have. Let's go ahead and back out. I'm not going to do it now. But if you can see, the end of the year was right here on the 30th. So pretty big drop. The close is 1388. Close yesterday 790. So huge drop on the Russian. And again, this is the one indice that's priced in dollars. And India, starting to lose my voice here, up 31.4% in 2014. Very strong day or year. And I still think this is trending higher. We've had a little bit of corrective action, but I think we've got, my read is that we're maybe in a fourth intermediate wave and then getting ready to turn for one more wave to the upside. But India's had a great year. And China, I saw a headline today that said China had the best of all the markets and up 52.9% by my calculation. Pretty doggone good. And so this is the Shanghai Composite is what we're looking at here, the Shanghai Composite. It's not the Hang Seng for Hong Kong. So here's the end. Here's the last trading day last year. And you could see it basically went sideways for the first 6.5 months. And then started to break out here at the end of July. And then basically just went straight up through the roof. And right now, I'm still holding this as a wave 3 count. I'm not sure what we got going on here. This has actually surprised me the way it came back up and is pushing through these resistance points. So we may have more. I mean, this may be still part of a wave 3 of some kind. It'll be interesting to see how it unfolds. Okay, let's now take a look at BIDU. We're going to take a look at BIDU, CTRP, Alibaba, and KNDI Corporation. All right, BIDU. Okay, the main thing here, I still think we're in corrective mode on BIDU. And, last week or so, it started to trend back down. We looked at this 2 weeks ago, and here is 2 weeks ago on the 17th. So you can see it bounced for 3 days, and then it's been trending back down here. We're below the 10 again. So we'll see whether or not we continue to get follow through and break this trend line here. Let's see. CTRP is the next one. CTRP, I think there's a good chance that this has maybe corrected as much as it's going to correct, and that it is trying to rally. Now, it's got a lot of headwinds because of these moving averages. Now, these numbers here, these are what I'm calling Fibonacci projections. Okay, so what I do is I measure from the beginning of this leg down to here, back up to here, and then it projects out. And at the 100%, that's where this leg equals this leg in points. Okay, so you can see it got very, very close. And a lot of times this is the way that'll work out. And nice reversal bar in here, it's trying to make its way to the upside, but the jury's still out, in my opinion, as to whether or not, this is not a strong enough scenario to say that, oh, okay, definitely ought to be buying it. Although, you could, if you wanted to just manage your risk, if you really thought CTRP was turning, you should put a stop down below this low here, okay? And it's going to be the same thing on KNDI, which we'll get to here in a minute. Alibaba, where are you? There we are. Okay, Alibaba had a little fake out here. I talked about this. I'd done a trade idea, got in here, and then it reversed back down, and I got stopped out. This now looks like it is, continuing that move to the downside. It's continuing to look 1, 2, 3, 4, 5, 6 days below the blue line, below the 10-day exponential. It's now closed below the 55-day moving average. So there's a good chance this is starting to roll over. But again, the caveat on this is there's only been like 72 days of trading. Okay, this was the first day of trading. So this is all you've got on Alibaba. Not a ton of history. And so we'll just have to see. A lot of volume. You look at 10 million shares today. And the average 50-day average is almost 27 million. So there's a lot of volume, a lot of liquidity, which is a great thing. But right now I'd have to say the short-term trend is to the downside on Alibaba. And the next one, the last one we take a look at, had a request for this from one of my subscribers, wanted me to take a look at KNDI. Now, I'm not looking to trade options on KNDI because I've decided once I get a stock below 20, you just don't get the bang for the buck on it that you need to. But that doesn't mean I'm not going to look at a stock like this because I know KNDI is very actively traded. Let's take a look at the moving average. Well, it's not nearly like Alibaba, but it's 1.3 million on an average for last 50 days. So not too bad. Again, the price range on this. So let's take, I think that this thing, if we look at all of KNDI, I think right now this is 1 and 2. You could almost make the case that this could be 1 right here, a primary wave 1 here, and this is 2. I think this is 2 no matter what. But right now, based on when I looked at the waves back in here, I'm sticking with this as 1, thinking this is an A, B, C flat. And then we've got this wave 3, which is fairly strong. It got stronger in the second half of the wave 3. And then we got this pullback, 4, and then a wave 5, okay? And it basically came up and it didn't go much further than the high of wave 3. So that's the count that I'm currently working on KNDI. Based on that, we're in corrective mode since this peak, and it's been acting like it's in corrective mode. A lot of overlapping waves, a lot of choppiness, and it looks like A, B, C, which then, in this scenario, you could have sat back and said, well, wow, it looks like this correction is complete right here, okay? You got an A, B, C, and then you almost got like 5 little waves, and you're thinking, wow, that's going to be a first wave of a new wave to the high side. Well, if you want, and then you got this pullback. So if you waited for the pullback and you jumped in right in here, your stop would have been below this point right here, okay? Because then at that point you would have said, well, okay, well, it can't be in bull mode if it takes out this point. And sure enough, it comes down, takes out this point here, okay? So now this looks like it's in corrective mode. So this wave now is not a correction in terms of a wave 2, this being potentially a wave 1, then a wave 2. This can't be a wave 2 because it went below this point here, okay? So now this means this is a potential start, okay? I'm thinking that we have a WXY, which is a complex correction, a combination of corrective action in here. And that's the tough part about corrections when you get into, because they can combine and they can go on, they can become very complex. The nice thing, you can draw a trend line across the top, and that can give you an indication that when that trend line is broken, that there's a better chance that the corrective action is over with. Now, one thing I'm looking at here is this looks like, and I'm going to blow this up, this looks like possibly 5 waves. A 1, 2, 3, kind of a sideways 4, and working a 5th wave up into here. So that's a possibility. And so now what I would do is wait for a wave 2 pullback, kind of like this scenario. Once you get, say, a 50% pullback of this wave, then you could set back and define your risk by putting a stop below this point here. And you could say, well, okay, if it pulls back, say, to 12, 12 and a half, I'm willing to risk and have a stop down below here that I'm wrong. Now, I'm just saying that's a possibility, a suggestion. Everybody's got to manage their own risk tolerance and how much risk you can assume on any given trade and all that kind of thing. You know what I'm talking about. So I'm just talking about a scenario here in terms of watching to see if this is a wave 1, watching for a wave 2, and then how you might be able to play it. Right now, I think there's a pretty good chance that the corrective mode is over with on this, although that scenario will break down if we take out this point again, if we pull one of these where it breaks it out like it did here. So that's my best estimate on what's going on with KNDI. And again, it's been chopping sideways since July, middle of July, down to sideways and then back over in here. So looking right now for it to move to the upside, but knowing that even when you get a wave 1, you're always going to get a wave 2, and it's a real question of how deep and sharp is that wave correction going to be. So, all right, that's it for tonight. Long video, a lot to cover, and wanted to get to all of that. So, wanted to wish everyone a happy new year, and it's been a great 2014, and hopefully a even greater 2015. And hope everyone's safe. Have a great time this evening and tomorrow, and we'll talk to you again on Saturday. This has been Joe for Beyond the Chart. Thanks for stopping in.